The next story is about Boeing. Boeing has been in the news, and I've been keeping you up to date on Boeing. Remember, I did a story in the Trending Thursday when Boeing is very confident that they will be up and running off the ground by the end of the year, by the end of December. The air people, the FAA, is saying, well, we don't quite know just quite yet. But Boeing hit with new industrial setbacks as the 737 MAX crisis deepens. Boeing Company said on Wednesday it still expects the U.S. regulatory approval for its grounded 737 MAX in the fourth quarter, December, sending its shares to higher despite a slump in quarterly profit. They missed earnings. The world's largest plane maker also said it was cutting production of its flagship Dreamliner, delaying plans to set up output of its money-spinning 737 line, and also delaying the arrival of its successor to the 777 Mini Jumbo. The fresh industrial setbacks heaped pressure on a newly rejigged senior management team fighting to repair trust with airline customers and passengers, shaken by an 8-month safety ban on its 737 MAX. All right, so that's one company in this. And this segment is going to be looking at the defense stocks or the defense companies, because Boeing is one of those defense companies. Even though it's the 737 MAX that's definitely hurting it, we're going to look at other stocks within this industry, like Boeing, that are in the defense industry. So let's get into the software. Let's go pull up those companies. We have Northrop Grumman is in that industry. Lockheed Martin is in that industry. Boeing, and I have one more. Which one do I have? I have General Dynamics. There it is. So all four of these companies are in that defense space. At the end, Raul, if I have opportunity to look at individual stocks, I will be more than happy to look at individual stocks for you, okay? So looking at Northrop Grumman, let's go one. Northrop Grumman is undervalued. Lockheed Martin, undervalued. Boeing, undervalued. And General Dynamics, undervalued. So all of the stocks in that space that I'm looking at are all undervalued. Let's look at the upside potential long term. Northrop Grumman, I would own over a AAA corporate bond. This should outperform the bond by 46%. Lockheed Martin should outperform by 52%. Boeing should still, even with the pullback with the 737s, it's still got good upside potential, should outperform that bond by 41%, and General Dynamics 35%. Safety, all of the safeties are above 1. Northrop, Lockheed Martin, Boeing, but look at General Dynamics. Its safety is exactly 1. This tells me that when earnings comes out on General Dynamics, it pretty much has a 50% chance that it will meet or exceed earnings. The last indicator, is the stock in an uptrend, RT, the short-term price trend. Northrop Grumman, in a downtrend, below the value of 1. Lockheed Martin, in a downtrend, below the value of 1. Boeing, in a downtrend, below the value of 1. And General Dynamics, below the value of 1. Notice that all of the stocks in this space are trending lower. Northrop Grumman is trending down lower the slowest. It is the only one that is very close to the value of 1. Well, so is Lockheed Martin at 0.98. But General Dynamics, for the most part, is trending down the most. The master indicator VST, all of them are above the value of 1. The leader, though, is Northrop Grumman with a VST of 1.29. All right, so there you go. If I'm looking for, now Boeing is a great stock, undervalued, good upside potential, safety is good, in a downtrend. If I were looking for a stock in this space, most likely, though, it would be Northrop Grumman, and this is why we analyze stocks. Now, let's go look at their graphs. We'll right-click, view the stock graph. Here's the first graph, Northrop Grumman. Look at this. In the space, the stock is below the 20-day exponential moving average. Look at the big bump up in price today. Nice up candle, approaching the level of the 20-day exponential moving average. General rule of thumb, when any stock is above the 20-day exponential moving average, it's a great time to be in the stock. When it's below, it's a good time to be out of the stock. That whole industry has been hit. So maybe not a good time to be in Northrop Grumman right now, but right now, look at that. Where did the price, the intraday price stop? Where did the wick stop? right at the exponential moving average. I would definitely love to see if we can break above that moving average before you pull the trigger. And that's right, y'all. This stuff really works. Love the earnings on Northrop Grumman, though, as well. Next stock, LMT, Lockheed Martin, also below the 20-day exponential moving average, approaching that level. Let's see if it can bump up against it and break through. Earnings, these companies make money. Look at the rising earnings on these companies. Woo! Boeing, well, Boeing got hit because of the 737, right? Look at that. Man, it missed earnings, though. Here we go. And look at it trying to do a rebound. There's a candlestick pattern known as a hammer. A little bit of upcoming from there, but man, it's got to definitely break above that 20-day exponential moving average. And last but not least, General Dynamics, also below the 20-day. Notice that every single one of these stocks in this industry have great earnings. Just may not be the right time to be in it. So there is a bad time to be in a good stock. Earnings is the engine that makes the stock's price run higher. Right now is not the right time to be in it. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.